All right, end of the day for Tuesday. Pretty flat day overall. You saw a little bit of a backup, I guess, in the overall markets, but our accounts pretty much stayed flat. We had a couple, I guess, earnings affected these, but we don't care. We're in it for the long haul. So all we're doing, we would never adjust a position unless we either hit an alert or comes down and hits our price targets for dollar cost averaging. Otherwise, we work off the scan. What we're doing basically here is looking to see what was affected, what wasn't. We can come back down, take a look, see what's actually happening overall. Looks like oil's starting to press up. I would suspect, with the oil pricing kind of fluctuating, that we probably see another push higher as inflation starts to take hold. So expect to start seeing that $3 a gallon gas probably by maybe midsummer, somewhere around there. You never know. Any supply disruptions, you know how it goes. They just tell us the same old story because it works with most people that don't pay attention to anything. But, so what did we end up closing on today? DMO, we already had two longs, AJG and CHY. One was actually a CEF. Our dividends today so far are $66.55, and profit off of trading is $14. So not a very busy day, but we'll take it. And if we look overall, so our averages right now looks like 78.60 per day, right? So I mean that's just working days, or if you call them days in the market. Okay. So what did we do last month? 65.50 on average per day. So it stepped up a little bit there. You could go in and try to figure out where that happened. It looked like we had some good sized trades close out there, right? But remember, you want to call them all-time highs, you can do it. I hate that terminology because nobody knows what a high is. We've been on this, ramp for quite a while. So all these could look much different depending on market conditions. So of course, we're in an uptrend overall, but you got to know which ones to be picking. That's where the scans come in helpful. We're just looking around to see. Thought there was some that were getting pretty close. Some start to spike for no reason at all. There was one. Where was it? See, NXST. It's a media group. I don't really care what industry it is as long as they're paying the dividends. It doesn't matter to me. If they stop paying dividends, it's simple. We stop using them. All right? So it's in their best interest is if they want more of the people's money to make profit. That's what companies are in business for. If you're investing in these companies that don't actually make money, then how are you supposed to get any kind of return? Let's see if that's on our scan. NWN. Don't think it is, but weeks go by pretty quick, so let's take a look. NWN. No, it is not, but we'll just take a look at it. We know we've had it in the past because it rings a bell. And yeah, so our scan kept us out of trading that, and for good reason. Yeah. Oh, I know what it was. What was the one that we had? Oh yeah, MMM, which is 3M. Yeah, so we ended up putting a trailing buy in on this one. Of course, on these size accounts, you know, we have a max shares of 12. That's the most you could put in, up to $1 million, right? And what we're trying to target here is 10% because we're under 100,000. So we have one share coming in here, right? And that's enough for us. Now this thing will pay $1.48. We'd be targeting 148 by 4. We're trying to hit $6 profit on that. All right. If you have 2 shares, it'd be $12, right? It's real simple math. You don't have to be a rocket scientist to figure this out. If you follow the plan, this is how you come up with 0 losses. A lot of people don't understand what we do. They poo-poo it. And it's like, whatever. You do whatever you want to do. We're going to continue to do what we're doing. Got a Well, yeah, we got about 20 minutes left. Days like this, I always feel like there's something going to come out in the news. Bitcoin, you know, we cashed out on some Bitcoin earlier today. Bitcoin, Ethereum, Litecoin. I don't think we hit on, let me check, on Bitcoin Cash. Those are the only 4 that we mess with because we got in back, you know, 2013 when it first basically hit on Coinbase. I can actually remember mining on some of my computers. If that tells you how long I've been in. I've actually still got the old like USBs that you could plug in to mine crypto. Everybody thought I was crazy. It's like, yeah, well, who's crazy now? How much did I invest? Yeah, well, you make 6,000% on your money. You can go figure it out. But yeah, technology is where it's at, man. Yeah, dips below 800. Oh, they're saying that's what it's going to go down to. We're still waiting on it to hit 913. We got up to 889.91. But that's neither here nor there. But yeah, we're all in on all the CEFs because we already had some. I think a couple cashed out today that aren't on the scan. So we won't get back into those until they come back up on the scan. It's real simple. Stick with your rules. I'm waiting for a lot of these ones that have been around forever. We need to figure out. Now, see, the reason why we can't put a trailing buy on this particular, on Murphy Oil, is we have a 50% and we're still sitting at this 46 and we have 47, so we're over the max share. So if the max shares ever change, or let's say hit 50, we could buy 3 more, right? And then we'd be back in our system. But right now, as it is, it's, you know, it used to pay a lot more than that. It used to be, I want to say it was at least double that, 25 cents, maybe more. But it came down when the price of oil come down. Of course, if they're not making as much money, the dividends come down. You have to understand this. If you don't understand it, look it up, learn about it. Don't take my word for it. That's a little G, a little movement. When I just look at these, I don't have any prediction. I don't have any, oh, it looks like it's going up. Oh, these red bars mean it goes down. If you think like this, you need to get out of the thinking like this. The price right now is $74. Your target price is $81.80, right? It's either that price or the $59.32. This is the two options on the table. This is it. I bought it at $77.09 based on a scan. I'm either going to buy more at $59.32 or this is going to get sold at $81.80. Or the third option, it sits in this range in between these two prices for the rest of my life and I get paid dividends the entire time. Right? It's real simple. I've got good examples of ones that I've held for at least some of these 10 years. It's not on this account. What the heck's that? There it is right there. Yeah, we have rights offering on this too, which it's not due till the end of May, I think. So until they figure out what they want to give for a price, I'm thinking the price is going to come down substantially more because this is going to make more shares available, which is going to dilute the price a little bit, so I'll wait. Yeah, I want to get the best price I can. Yeah, people blowing me up here with questions here. It's like, yeah, so, you know, whatever they offer the price at, I mean, because it's below my average cost, sure, I'll buy more, but here's my max shares, right, 196. Well, we'll see what it is on that day. This was back on 4 or 5. We're now looking 20 days later, so it could have changed. We'll have to look into the algorithm to see if what it's changed to, if at all. It may have, it may not, it may have gone down. It might be right in line with this and we do nothing. That's just the nature of the beast. There's another one. These are kind of sister. CRF has been around since 1973. Cornerstone Total Return Fund. Go look at the fund if you don't believe me. I mean, it's insane, the return that it has. But you got to understand, it's not. They don't give you full. What they're telling you here is 16.4. It's actually broken down. You'll actually get some of your capital back, and there's nothing wrong with that. Just you have to have a long-term, you know, plan. You cannot take a loss here. You take a loss here, it's magnified. People don't get that. So what you basically do is you say, either I'm either going to take profit at this, you know, I'm going to get 16.4% profit from the time that I buy it, right? And or because as the price goes up, this dividend yield is going to go down. So I want $1.92 to 175, so close to $200 profit, right? So I either get the $200 profit and I get closed out and I keep all my money plus the 200, or I collect dividends for the rest of my life, right? So I'm here on CLM. Say okay. you have 175 shares, 186 as of, well, somewhere in here, 419. Our algorithm says 186 is max shares. So you build this up over time. That's how you know that this account has been here a while, because we'd only be buying 19 shares at a time. So it's basically 10 trades, right? So it had to be coming down, going up, coming down. And eventually what happens is, in the future, if you can see into the future and you're patient, what will happen is your average cost will come down, right? But so too will your target price, you know, what you're willing to sell it for. So all you need is that push up. So like to actually move this down, like if you bought at $10, right, and it's at what, $12.69, you'd have to buy double the amount of shares. What are you doing? You're doubling your risk for a 50-cent move of your average cost. It's not bright. This is where people get into trouble, because they keep throwing good money after bad. You're better off just sitting and collecting the dividends, because you know now you have your loss right there. You know what you can lose, right? But if you've had it for 10 years and it's paying 16%, you almost doubled your price. You've almost doubled the amount that you invested, right? The 10-7 rule, double your money, right? So let's say we go, what is it, 16? So if you had 10, well, maybe you're a year and a half into it, so you already made $21.99 plus another $1,000 on top of it. So this negative, sure, it's negative, but is it actually negative against your account? If you set up a chart, an Excel chart, and actually followed this entire account for, or this particular underlying for the entire time you had it, you'd realize that you were in the positive. This wouldn't be a negative number in your spreadsheet. It's just showing this is because this is what it represents in your brokerage account, not in your, you know, gains, because your gains have far outdone this. Now, if this goes to zero, the most you're going to lose is that $21.99. Then subtract, let's just say it goes to zero tomorrow. You have to take the amount of dividends that you were paid over those last years, or however long you held it for. If you held it for at least 10 years, you've doubled your money at least. This is what I'm saying. So it's 16.4%. It was higher than that last year. Yeah, it was $2.12, then $1.92. So they're increasing the amount of shares. So it's possible that this dividend yield will come down. These are the type of accounts that just keep moving around. But they're income generating, and they're wealth builders. This is just one example of how you can, you know, get to a point in your life where your money is making more money than you are. Now, these are really small accounts here. We do this on purpose. We don't show large accounts, because then it becomes this game of, oh, well, shit, you make this kind of money because of this. And, you know, you've got X amount of dollars in here. It's like, yeah, well, I mean, we got to this point and I can show those, but what's the point? You know, majority of the people that are going to be watching this, if you're watching this for the first time, you need to be concentrating on the accounts like these right here and see that they all return approximately the same percentage. 1%. Doesn't matter the value here, right? If it's 1% per month, that's 12% per year per account. If you add 3 of those up, you have 12%. And when you get into, like, I've got 14, 15 different brokerage accounts, they all produce 1%. It can go higher than that. You know, it can go to 2. I've seen it at 2. Those are the good years. Right now, we're working on 1. This market is just in a funk. Like I say, it's in a funk because it's not really doing anything. It's just slowly melting up. This is what you call it. Like this little jump here probably took profit on a position back there. Who knows? I mean, I don't think about the past. I think about what's going on in the future. If this comes down against me, I have 2, right? Here's my next entry, 119.96. My next entry after that is 101.87. The most I'll have in when it gets down here would be 6. But if you go all in at 20 right here, because you're following some misguided, rules or explanation, you don't understand what we're doing, then you could get caught up here. I have no idea if it's going to 140.55. I'm just listening to what the scan's telling me, the most predictable route based on the information that we have. What can happen? There's so many variables that go into it. So, like I say, the same thing here. This could sit in this range for the rest of my life, and I'm okay with that. Why? I got 19 shares, right? In this particular account, what we invest at a 31,000, we put in less than 1%, right? $343. It's paying us 8%. If this value changes, right, $1.48 per year per share. So it doesn't look like much. Like was it 19, maybe $25 a year? Now you take a look at how many different ones we have just in this one small account, and we keep trading these on a day-to-day basis, right? So these represent your trade or your dividend yield for the year on this particular trade. However many shares you had, 10 on DMO. That was today, $14. CHY. As your account, you can see how when your account gets bigger, you take in more, right? The more trades that you do, the more times you hit that upper dividend amount, you take home the dividend for the year. If you're doing it 10 years later, what's the difference? If you do it in a month, you get it in a month. You do it 10 years later, you've been collecting dividends for 10 years. It's a no-lose situation. If it goes to zero, which things can go to zero, that's not what I'm saying. What I'm saying is if you're diversified enough, if you got $85 in this one and it goes to zero, you lose $85. I mean, if you don't understand that, ask a question. Send me an email. I'm trying to help as many people as possible. I don't know what's happened in the investing world, but I mean, there's a lot of people that are trying to get rich quick. And hey, I invested in Bitcoin many years ago, and got lucky. But that doesn't make my trading any different. I was trading like this before Bitcoin. That's how I've gotten to the place where I am. So now I can share. The only thing we don't share, the only thing we don't give away for free, for obvious reasons, is our scans. The only thing off the scan I give people is the CEFs that come up on the scan. There's something that everybody should have in their accounts, in my opinion. You can look at them, if you don't feel comfortable with them, research them. Like this one seems to be jumping up right here. Not enough. It's got a ways to go. Let me see, we got 6 of those. So it's going to be at least 18 bucks, right? See, you don't even really need the charts. I started off on charts years ago, and I tried all those silly, what do you want to call them, indicators. I'm sure they work for some people. Well, I'm sure they work, period. But this really comes down to money management. If you don't manage your money in your account, there's no indicator that's going to help you. It'll help you get into a trade, but it sure as hell won't get you out. We might get lucky and take that PNC out. We got 3 minutes. Let's watch and see. Just out of curiosity. Sometimes I get lucky. Well, I shouldn't say sometimes. I get lucky a lot in the afternoon, just next to the close, just for the sheer number of stocks that I have at these accounts. And most people have 10, 20, maybe 30. We've got hundreds. So we cover, a wide berth of stocks, and the scans basically limit us on how much we can do. This week, what do we have on our scan? We had 56 on our scan this week. The week before it was 130. But not all of them will get bought, because there's strategies within using the scans. If you're interested in learning more about it, the education's free. Don't be afraid to ask questions. I use the same strategy with Bitcoin. The only thing different with Bitcoin is there is no dividends, but because I already made my money on the front end, when you make 6,000+% on your money, and you're kind of like, okay. I'm not so worried about not getting dividends on something that I think is probably going to be very expensive in the future. I could be wrong. But worst case scenario, all you have to do is buy more. I'm not a, what do you call them, a hoodler, whatever they call them, that just buy and hold. I think you can do that with a small percentage of the amount of cash that you have in your portfolio, but invariably you can't realize a gain unless you sell it. So yeah, we're gonna start. What do we get to on this one? We get to a high of 183.83. We need another 17 cents to close that, maybe no more. And it's not like we're going to make a killing on that. We only have one, right? So we're going to pick up $4.60. Just think number of occurrences. If we can hit this 1,000 times, and your accounts start looking like this, your trade log starts looking like this. You buy and you have no losses. This is what you're looking for. All the accounts are similar. They're different because we spread all of these out between the accounts. And if you just have one account, then you'll get there faster. We spread these out between different accounts. You can have some retirement accounts. You can have cash accounts. You can also have accounts that are Roth. There's several different reasons to do it, but you never put all your money in one basket, and especially not with just one brokerage. Now, I've been with Interactive Brokers for 27 years, something like that, and I've paid $1 per side, and I've made them a lot of commission. But I don't consider paying a commission a problem for a service that, I've never, ever had an issue, ever, with their platform. I do use their options trading. There's definitely platforms that are cheaper out there, but I don't think their functionality. Well, everybody's got different bells and whistles. Let's put it that way. So, when you're looking at profit, that's my bottom line. I don't really care if you've got some fancy thing that scratches my back every time I make a win or something. I'm more interested on the bottom line. Am I making money? If I'm not making money and your platform is somewhere along the line hindering me, then of course I'm going to move to a platform that makes it easier. Here's a good example. TD Ameritrade. People love their platform. I like their service. I like their execution, but I do not like their charting. I can't trade from the charts very well. It's just very it hadn't been updated in forever, and there's so much more that you could do with it. So, you know, I bought a third-party software that integrates through an API that allows you to trade through TD Ameritrade and several different others. I can trade through Interactive Brokers if I want with the same platform with two different brokerage accounts open, but I choose to just use, it's just easier when I'm doing equity trades to just go right through Interactive Broker. It's just seamless. I don't have to worry about it. I don't have to worry about dinking around or, you know, slow connection or something like that. But for TD Ameritrade, for my larger accounts, oh, it's great. You know, I can get on there. I can set up my charts exactly the way I want through MotiveWave, and it's a good platform. I'm not paid by them to say any of this. I just don't use it that much, just because they're kind of, you know, I put my orders in and I forget about it. Now I look at them every day, but I don't actually use the charting platform that much. I just basically look at the accounts. I say, okay, put in my orders, and I'm done. What I'm showing here is I show more charts here than anything, but I could pop any of these up into MotiveWave, and you'd see something totally different, more charts based. And some people are more visual like that, but charts can fool you, and that's what I'm trying to get across to people, that you can look at this number and multiply it by this number to come up with your profit, right? 12 times 1, that's $12. So you know that SCM, if it moves 99 cents, which is $13.59 up to $14.59, right? That's going to be $1, right? So if you add 10 cents to it, that covers your commission because you moved $1 by 10 cents times 12. That's your profit, right? Be $12. It's pretty simple. Yeah, we get a recovery in Starbucks. I guess we're closed right now, but I was a little late getting on, so expand upon that stuff a little bit for those that you are wondering. But yep, that's it for today, and we'll see you guys in the morning.